All right, good morning. We are live. Coop and Liz, good morning. How are you today?
Doing well.
Good.
Thank you.
Great, great. So, welcome to MMBBA Live. I'm Sean Williams, and I'm your host and current president of the Maryland Mortgage Bankers and Brokers Association. So, each week we bring conversations focused on leadership, advocacy, innovation, and the issues impacting mortgage professionals throughout Maryland. One of my priorities as the MMBBA president has been helping our members better understand the value of advocacy and the impact public policy decisions have on our business or customers, consumers, and our communities. Today's discussion focuses exactly on that. And we're going to explore how advocacy works, the issues shaping mortgage banking across the country, but specifically state and local, and how mortgage professionals can become more involved in the process. So today, I'm joined by two outstanding leaders from the Mortgage Bankers
The mother
Association.
pays you well. Thank you, Sean.
Yeah, that's right. I told you we're going to make you look like heroes today. So, so William Cooper, who just spoke, is a vice president of the state government affairs and industry relations, and he works closely with mortgage banking associations across the country on state legislative and regulatory issues. Did I get that right, Coop?
Yeah. Thank you.
Okay. And I'm also joined by Liz Facemeyer. She's the associate vice president of state government affairs and industry relations, who also works extensively with state associations and industry stakeholders to advance housing and mortgage banking priorities. Did I get that right,
You sure did.
Liz? glad I did. And so together they bring unique perspective on the issues shaping our industry and how advocacy efforts at the national, state, and local levels work together. So, William and Liz, thank you both for joining us today. Thank you very much. And as we do with every episode, before we get started, we're going to do something quickly. So, hopefully, you thought about it. I in a prior life when I was doing these live streams, it would be a surprise. I wouldn't give people an opportunity to think about these types of things, but I found that folks get really anxious about it, and sometimes I surprise them, and then it's just it's better for me to tell you. So hopefully you thought about a few things. So what's the one or unexpected fact about you that most people don't know but probably should? Or maybe not know,
It's the
or know.
probably should part that trips me up. I don't know what probably should know.
or we could say maybe they don't care.
But I'll go first if I might. And this is I'm either really brave or really stupid. But I once flew with my buddy, one of my best friends, and my brother and his wife, my sister-in-law, to South Africa, and we went. Me and my buddy went into one of these shark cages that they chum the waters and brought the great white sharks in. And if you look at my Facebook page, there's actually a very brief video of a jaw of teeth going right by the shark cage. And like I say, that's either the dumbest thing I did or the bravest thing I did.
Yeah, no comment. No comment. I'll keep my comments to myself.
Well, Coop and I talked about this, and we found that we have some similarities. Because my interesting fact or things that people should know is I'm a thrill seeker. So roller coasters, all that, I would have gone on that cage. But my biggest one, I think, was in Brisbane, Australia, getting to skydive and be one of the first to see the sunrise for the day, because you're in Australia for the timeline. But it's great.
Oh wow! So 2 out of 3 thrill seekers on this call here.
It's
I
funny,
didn't
Sean.
ride.
This is the thing we thought about the most in prepping for this call.
I told you this is the most important part of it all. Anyway, I've been to South Africa, and I promise you, I did not get in the sea with the sharks. Liz, I didn't ride a roller coaster until I was an adult. I remember being a young lad and going to I think it was King's Dominion or something like that, and my friends and I we get up to ride this roller coaster, and it's our turn to step into the car, and I think I got sick, or scared, and I turned around and I went. I didn't get on, and so my friend group from childhood, they still tease me about that to this day,
Yeah.
and said I was a chicken for not getting on the roller coaster with them, and they had so much fun doing it, and I didn't care. I was fine, but I didn't ride a roller coaster until I was an adult.
That's all right.
Yeah.
We'll work with you anyway.
Yeah.
Yeah, no, I'm not skydiving either. So can each of you? It doesn't matter who goes first, but briefly share your background and explain your role at the MBA, the Mortgage Bankers Association.
Liz, why don't you go first?
All right. So I started the industry, I believe, 15 years ago. I was a loan originator. I kept getting in trouble for underwriting on the phone. So naturally, I went to underwriting where I did a lot better. Really enjoyed it, working on processes, and then moved into leadership and then into government affairs at that same company. And that's where I really loved the idea of helping shape the legislative and regulatory landscape across the states. There's a lot going on, but I love the chaos. So it became really fun. And I think my background of working in the industry has really helped me understand some of the issues and relate to a lot of our members. So that's kind of why I wanted to go to MBA and join Coop's team and have a broader reach and learn a lot more about the other types of institutions, types of business models, and get to know more folks. And Coop has been probably overly welcoming, great to work with. And we've got Ainsley on our team too, this is a great crew. So Coop, I'll pass it to you.
Yeah, thank you. And my mom clearly has sent you a check as well. Great to hear. So, Sean, thanks again for the invite to do this. We don't do enough of it with our state partners. So my career kind of started after I got out of grad school at NYU. And I mention all this because it's been more of a political path to this kind of role. I sort of had part-time, actually I was an unpaid intern for academic credit in the governor's office in New York City, and then kind of parlayed that into a part-time job at $6 an hour, and then got a full-time job, which paid me all of the whopping princely sum of $25,000 a year, but for the privilege of being able to work in the governor's office. And because I had a degree in public service, that was my calling, and managed to work my way into a role where I was preparing the governor's daily event briefing book. And weirdly, after Mario Cuomo lost his reelection bid, I kind of found my way back to that work after 3 years in the state assembly, which taught me a lot about legislative process in the state, that lessons I still use today. But it got me to DC when his son Andrew Cuomo was HUD secretary, and that's kind of how I came to these issues, was working in HUD. And a lot of those folks came over to MBA, and they hired me after the Clinton administration finished. And I've been kicking around MBA's government affairs team in one way or another for the last 25 and a half years, and have had, I think, the best job at the place. After Bob Brooks met our CEO, I've got the job running this state team and get to work with all the wonderful partners and all the volunteers at our member companies who focus on these issues. And it's just been, I'm the guy who goes to work happy every day because I've got a great job with really interesting, compelling issues and really feel fulfilled. So that's kind of a little Reader's Digest version of my story.
No, that's awesome. 25 and a half years.
Yeah. Who would have thunk it?
Well, at least you're happy every day going to work, though. Yeah. No, that's so stay there. We have a long-standing relationship, the MMBBA and MBA,
Yeah.
And that's evolved over the years. Could you speak to that, Coop? And then also you mentioned a special relationship.
Yeah.
I don't know if you can talk to that or not, but if you can speak to that.
Let me take a step back and just explain. Sort of the department has two halves, right? There's the piece that Liz manages, which is to serve as the home for discussion of state policy issues that face the industry. And we work with associations like MMBBA and others across the country at the state and local level. There's something like more than 130 of them, all of which are independent. And they flag issues for us that we use our member base to help fight in state capitals. And they also flag issues for us to bring to states, through Liz's committee. But the other half of it is this sort of serving as the primary contact for that group of 130 different state and local groups that, partner with us and rely on us in many ways to help them with their primary mission of advocacy, but we also work together on, different business development pieces. And when it comes to the MMBBA, the phrase I've always landed on is sort of, this idea of a special relationship coined, I think, by Winston Churchill, right, for the Anglo-American relationship. Many of us live in Maryland, and we participate in the grassroots actions. I know up to and including Bob Brooksmith, our CEO, he takes those calls to action very seriously when we're lobbying in Annapolis. And, I contribute to your PAC because I've got a house out on the Eastern Shore, and that's my primary residence. But it works the other way too. I mean, Rich Green, one of your leaders, his son is our Democratic Senate lobbyist. So there's all this cross-pollination, almost incestually, that exists. But that proximity has allowed us to play a much more direct role in advocacy and in participation in your normal course of work. And Liz will in a minute talk a little bit about the state legislative committee that you have and how she shows up for those meetings. But I once got in a car and drove out getting ready to participate in a hearing on a CRA issue in your I think it was in the Senate, but I may be wrong. I'm having trouble remembering it because as I got there, they canceled the hearing, and Tim Go and I were sort of primed and ready to go. But it's stuff like that we can't do with California or Texas or Ohio or all these other ones that we work so closely with. And then it's the other piece of this is the Maryland legislature sort of sometimes manufactures some, I don't want to say uninformed ideas, but ideas that need a little bit more close attention. So we wind up digging in a little bit more with you guys and have to collaborate a little bit more. But hopefully that explains what I mean by special relationship.
Yeah, it certainly does. And I appreciate you speaking to that. So when, Liz and Coop, when you look across today's mortgage landscape, what are the biggest policy and sort of regulatory issues facing our industry in the States?
I think it could probably take a whole hour on that, unfortunately. One interesting thing is Maryland the last 2 years has kind of interestingly been introducing legislation and sometimes enacting it that are basically GSE guidelines. Loan assumptions is one of them. This year they had a reconsideration of value bill. It's very interesting that Maryland specifically seems to want to codify those things, which kind of raises the question of how do you allow the GSEs to assess risk and change guidelines based on what they're seeing in their whole portfolio when a state may be holding them back based on one thing they offered one time or other issues. So that is something very interesting and specific to Maryland. One, I'll let Coop talk about CRA because I think he probably still has that high energy he showed up to the Capitol for at that hearing today. But AI, of course, artificial intelligence is a huge one. Colorado enacted the bill in 2024. They fought about it for 2 years and enacted a new version of the bill this year. They proposed regulations and it's going to go live in January 1, 2027. California also has AB 1018, which is still alive. They don't adjourn until the 31st of this month. But a lot of the AI discussion is not totally informed around how the mortgage process works, what our laws and regulations are that restrict us from, saying it was technology and it wasn't our fault when at the end of the day, the lender's decision is under the law, their decision and theirs to be compliant with. So it's a lot of educating them on the technology we've used for decades versus where we actually are as an industry and using these more advanced versions with AI. So that's been a little bit of a issue with trying to get mortgage out specifically in states that don't want to provide any exemptions when I think mortgage specifically has very, very good cause to request these exemptions considering our level of disclosure, fair lending laws, and all these items. So it's been a tough battle. That was a big one. We've got a lot of servicing issues as well. Zombie mortgages, that's another big one. In Maryland, there was the emergency guidance issued by the regulating office that was then rescinded. We had to run that bill, and Maryland Mortgage Bankers and Brokers was huge in accomplishing that for us. So we really do appreciate that. And you guys have been involved in following the governor's working group on this to prevent further legislation to be introduced this next year. It's been, I think, a 2-year battle now on this specific issue, which is a very small subset of loans have a potential issue. and it was applied broadly, which we saw a lot of the market actually retract, fully pulling out of the state once those regulations went into place. So really quick action by MMBBA and continued progress on that. And I can't thank you guys enough for partnering on that, but that's another big issue we're seeing in other states. And we're showing, what Maryland has done is the best path forward. Let's see what this working group comes up with before other states go too far and see that retraction in the market as well. Coop, do you want to cover CRA?
Yeah, sure. The federal CRA law, which has been on the books for 50 years, was designed around a business model that takes money out of communities via deposits or other kinds of money flows, and requires those depository institutions to lend back into the community. And the exam is around holding those industry players accountable, right? I don't know, about 2020 during the pandemic, we started seeing a couple of states review a law that had passed in the sort of during the financial crisis in Massachusetts to apply CRA to independent mortgage banks. And New York and Illinois were the two states that said, well, let's copy them without really doing any kind of an analysis. And this is a unique opportunity. No state beside Massachusetts had done this. And, the idea here is you can look at the evidence. There is data in HMDA that you can review for Massachusetts and compare it to the rest of the country, but it was done without much regard for that, sort of evidence-based approach for policy. And the political expediency prevailed, and suddenly we had a couple more states. And that triggered states like Maryland to take another look in more recent years. And we've had great fortune in your state to be able to push back successfully in, I think, each of the last 4 years. I don't think there was a bill introduced this year. I think last year there was a bill, but correct me if I'm wrong.
Yeah, it was an oopsie bill last year. The wrong language was inserted and immediately withdrawn, thankfully.
I mean, the basic logic here that we have tried to get legislators to understand is that by reviewing that evidence that exists for free to everybody to evaluate in the CFPB's HMDA data, you can show that IMBs are already achieving the results that the CRA law was intended to produce. And however you slice it, whether it's purchase originations to minority heads of household or to Black heads of household, or proportions of the FHA, VA, or rural housing service loans, they're dominating those categories. And it's not we're not suggesting that it's at the expense of depository institutions that play a very important role in the mortgage ecosystem and providing liquidity. But to sort of institute a whole new examination regime, which is costly and has legal and regulatory compliance risks associated with it, is just not the right approach. And so in Maryland, because we work so closely together, and I think those arguments have gotten some traction, we've been able to prevail. But we, every year it's a fresh opportunity for some, new lawmaker to pick up the old bill that hasn't moved and to try to, maybe get that done and build their political career. And I'm afraid to say that that's kind of a reality we see a lot around the industry. And we need to continue to work hard to educate and advocate. Sorry, that's a long answer.
No. We've seen we've seen that happen 2 years in a row where there was a bill didn't quite get through.
Yep.
The next year they changed the language just to touch on it, and it still didn't get through. And I'm finding that sometimes, especially the unintended consequences, like Liz, you mentioned, where originations were completely halted. Like I remember it was a panic in our state where we couldn't do home equity lines of credit. Jumbo lenders were not going to do loans in Maryland. And, finally we spoke up and they listened because it was an emergency. We weren't going to be able to help the consumers that, we're protecting here. And So yes, I can see where it does have unintended consequences, and we do appreciate the relationship because you all helped us with that. And
If I could just brag on Liz a little bit. I mean, these handful of issues that we're talking about, Sean, this is, the part of the iceberg that's above the water, right? The number of bills that Liz reviews every year, I'm not kidding, they're in the thousands. And that's because she's got this massive portfolio that spans the entire mortgage process in every state. And it's not just legislative, it's on the regulatory side as well. And there's this whole other suite of issues that we deal with in the NMLS system that we go directly to regulators on. And that's where we were last week, was at the ARMOR conference, which is one of the two principal associations that gather state regulators for the committees that they have to discuss policies. And we try to drive alignment on state policies through those, and try to make sure that those opportunities are not wasted in terms of education and ways to engage. And a lot of our members show up for that too. So we're very grateful for that involvement.
I will say my job was a lot easier when we have a state partner like MMBBA who has an advocacy arm, has a very strong committee, has dedicated members. And for anybody who may be listening, it's really easy to get involved. It's, reading a bill is maybe not as fun as reading a book, but it is the same practice, just a little bit different and maybe a drier read. But I always find it interesting just thinking about how it applies.
I was one of those that thought it would be like super complicated. It is still hard though.
Yeah.
To go through. And this year was the first time that I've really like kind of dug deep and delved into the bills, and then also cross-reference to try to understand exactly specifically what I'm reading. But also, like on our Monday calls, for instance, we go over them, and that's very helpful as well, because something that I think that maybe I'm interpreting a certain way may not be exactly what the group's seeing, or someone else that's got more experience. And that collaboration has helped a lot. And so I'm finding myself, I don't know if it's fortunate or unfortunate, but maybe for my personal life, unfortunate, but for the industry that we represent, it's definitely a fortunate thing to be able to understand it, because again, I have a front row seat to seeing how these decisions can impact our industry and ultimately affect the consumer potentially in a negative way.
Yeah, Sean, if I could brag on you guys for a minute, one of the things that you guys do really, really well, and it's more than just like the ethos of the MMBBA, is advocacy engagement. You like practically what you do very well, and I would want to clone this for other state associations, is they take in this legislative committee the new guys, right, the newbies, and they kind of, through example from the older, more seasoned guys, help you do exactly what you're describing. Understand how to not just read the language, but interpret it, share conclusions, and discuss it. And the hive mind on something like this is so much more effective because you have so many different kinds of people in the industry on a committee, rather than one person coming in and just reading a bill and they've got their part of the industry, whether they're in originations or legal and reg compliance. Like they're not siloed in their total perspective of it. So I think you guys do that exceptionally well and deserve credit for it. And if anybody's listening, don't be afraid to not just become a part of that committee, but to really dig in and become part of the discussion. It's such a very helpful to have partners like you guys, not just showing up in the front of the charge on any particular issues, but to do all that work behind the scenes to get ready for that.
Thanks for that, Coop. Yeah. My mom reached out to you this morning, right? As well. She wants her son to do well in this position. So thank you, Mom.
He pays well too.
No, that's awesome. So Liz, you spoke to a few of the sort of trends and things that we're seeing across the industry, but what should we be paying attention to? Like, for instance, lenders, brokers, and servicers, like what should we be watching that are like sort of major regulatory and legislative developments that we should be watching and looking out for?
The conversation at the state level, I think, is going to increase, since what's happening at the federal level, we see a totally different CFPB than we have been accustomed to since its creation, really. And that has had a reaction in the states. One thing that's kind of held them back is state budgets don't let them build out their own mini CFPBs overnight. But we do see a more higher interest from the attorney generals in the mortgage space. We see a lot more regulatory action at the ARMOR conference. There's a lot of discussion on how do we deal with the large non-bank lenders and what does that mean for the rest of the industry on how they're working on this. So while we haven't seen a sudden rise in many CFPBs like California did back in 2019 or 2020, it is something that I think is on the table once they can do it. And I do believe with how the economy is currently going, the attorney generals are specifically watching foreclosure rates and may come in and enter the picture a lot sooner than we think. So while we haven't seen a big reaction yet, it doesn't mean it's not coming. There is a lot more interest. So I think we need to be watching that side of the house, but then also looking at things like the CRA and making sure that we're doing what we can in the communities and educating consumers. We had a really interesting conversation with a commissioner of insurance who asked us to help educate consumers on just flood insurance. You know, if you're not in a flood zone, you may still actually want to get flood insurance. There's a lot of different areas where I think maybe we could do more as an industry to help educate consumers, but that same education needs to be applied at the Capitol too, just to make sure we have a better understanding, because one complaint from any of these areas can result in legislation. That is the power of democracy, which is really great. But sometimes it makes it a little bit harder for us to do our job and to really get in there and rectify situations that were maybe just a training issue. It doesn't have to be written in law.
Yeah, I think that's very well said. I think the only thing I could add is sort of picking up a thread that Liz has already put down there, which is this idea that in the current climate in DC, there isn't a lot getting done in Congress. And so state legislators, regardless of party, see their role as a more active one, at least under the current administration. And sort of the stalemate on Capitol Hill predates this particular administration, but it's sort of combined at the moment with this scaling back of the regulatory apparatus, particularly in the key agencies that our industry works with. And so states they have a hair trigger, especially with attorney generals, to sort of look at our industry and subject it to much more closer scrutiny.
So speaking of Congress, the housing affordability continues to be one, of the biggest challenges that we're facing, for consumers. And so Congress responded by passing the Road to Housing Act. And what efforts are being discussed in the state to address housing supply and affordability?
Well, I think with the Road to Housing, it doesn't solve, and these are broad paint strokes here, it doesn't solve for local zoning, for example, or other kinds of state-based solutions that need to be discussed either regionally at a county level or at a municipal level. So that's an important role state associations can play, is engaging in those debates. There are some things in Road to Housing that are manifesting in states that either are, well, let's give a very concrete example. Liz and I are sort of working with the Michigan Mortgage Lenders Association on a copycat effort to institute at the state level this investor ban, right? And the way it's done is sort of a blanket prohibition, but then with exemptions. And our commercial multifamily members are very concerned that the way that they exempted build to rent properties includes a phrase called newly constructed. And that is concerning because first of all, it's not defined. And secondly, without a definition, it's pretty uncertain how you can stretch that to, a secondary market purchaser. So if somebody is constructing this particular development and wants to sell it so that they can fund the construction of the next one, is that purchaser going to be qualifying as purchasing a newly constructed property? So it's sort of in the minutia, but those are the kinds of things that we're seeing in the states that are important to pay attention to. But on our side, and I'm happy to say that, we've been working for the last, I want to say 5 years through our convergence program, which is a place-based initiative looking to do, sort of affordable housing via stakeholders from across local landscapes. And we've done a few of these, but one of which is now in Baltimore. And we're very excited about that opportunity, and happy to invite our colleagues to come on and talk about some of that. But that's a recent announcement over the summer, and the idea is to try to put different stakeholders together to create local solutions for addressing affordable housing problems in communities.
I'll add to that. Road did include some directives for states, but again, as Coop said, it's going to be up to the state whether or not it applies for one, but also how they want to go forward with it. There's supposed to be frameworks of how to reduce costs and increase supply through new construction. So that's going to come out, but I mean, it may be a year till we see that. I think roads' real impact is going to be years down the road. The one big thing that we got immediately was changing the definition in HUD for what manufactured housing is, which is great. Some states still do define it similar to how HUD had previously with the chassis requirement. So that is something that we're going to work on and support our state partners in revamping to make sure we can open up for the consumer choice to either have it a chattel loan as they used to, or have the opportunity to do real estate mortgage when they go to financing. Because a lot of the manufactured homes today, I think, you still see some NIMBY side of this, but they're not anywhere where we used to. They look fantastic, but they're really what probably will be the new starter home going forward.
And so this may be off of a topic, so to speak, as it relates to some of the questions that we prepared, but I'm still curious, so I'm going to ask these questions. We have our state representation, right? Feeds into these national decisions that are being made. It's super important, as we know, for states to be involved in that larger discussion. How do we get there? How do we go from something happening in Maryland or Pennsylvania or a place there to be ultimately affecting a national decision? Does that make sense? What I'm asking, like, how do we get to the national decisions from a state level, and why is it important? Like, how important is it?
It's super important. I think one really good example is trigger leads. The states actually started that fight back in 2007, all through the next 15 or so years, trying to do something, but FCRA's preemption was so strong, they really couldn't proceed on it. It was known at the federal level, but something that, as anything with the federal government and Congress, it takes years to be able to accomplish it. It's a much bigger argument because it's a much bigger stake than, some of our state discussions, but it is something that my committee, the State Legislative and Regulatory Committee, is used for, to make sure everyone nationally at the state level knows what's happening specifically in Maryland, but also that gets communicated to our federal partners and Bill Kilmer's team at MBA to make sure we hear each other and are working on, alongside each other and try to solve for where we can. If it's a Maryland issue, it's likely going to be a multi-state issue, and then does it become a federal issue? And that's where Coop and I play, I guess, the game of going back and forth and making sure we know what we can do.
Yeah.
The timeline is the problem that's usually working against us. States can do something
Right.
tomorrow, federal government, maybe 5 years sometimes.
But there are solid ways that we have worked with states to change federal policy. It just, Liz's point is very well taken on the timeline is so much longer and takes, it's sort of a steeper push up a hill. Another really good one on this and how we've collaborated with states is temporary authority, which at one point was called transitional licensing for mortgage loan originators.
Mm-hmm.
And it took, like what MBA did is draft model legislation that a state could pass. And a couple of states did it. And once you had that in statute at a state level, then our lobbying team could work with the representatives from those states on Capitol Hill to get legislation introduced and say, well, your state's got it. Let's change this in federal law, which is ultimately what we had to do. And so Ohio was followed by Virginia, followed by North Carolina, and then there were sort of different versions of it in different places. There were some regs in different states that achieved this. And it allowed us, through our Mortgage Action Alliance, our grassroots program, which we should talk about in a minute, to help build bipartisan support through sponsorship of those bills, which ultimately got us to a point where we could start moving them because so many people across party lines had supported it. You could get it through the House Financial Services Committee, get it onto the House floor. They could pass one chamber, you come back the next year, maybe you get it a little bit further, but ultimately, I remember saying it took about 10 years to get this bill passed. And we had to work with state regulators too, so our state partners helped there as well. But we got it done, and 18 months later, because of that implementation period, we had basically, instead of cursing the darkness, we had lit the candle and changed policy. And the world is different now for loan originators who want to move from state to state or want to move from the federal system into the state system. And that really leveled the playing field. And we could not have possibly done that without our state partners being so engaged in advocacy at the state level that allowed us to make that synaptic connection to federal policy.
Thanks for that. Yeah, like outside of the fun fact, that was just one of the questions that I just needed to ask, because
it's a great one.
It's so important, and we don't think about this, and how we can affect the broader scale as it relates to the efforts that we have in the state. And so, like, just the trigger lead, yes, I understand that, but even with the the temporary authority,
sure,
that's more or less a common sense issue, in my opinion. And so it's just a matter though of writing the policy.
Sure.
And so we don't really, I don't think all of us understand in the industry how being actively engaged and actively involved from the state level, how that benefits us to be able to operate our businesses better.
If I could offer one other thought, and this is purely political, but you've got a couple hundred or more state legislators in the two chambers in Annapolis. I guarantee you almost all of them at some point, if given the opportunity, would want higher office. And a lot of them do achieve that by getting to Capitol Hill here in the district. Those relationships that you make are so valuable for the national agenda. So the role of the MMBBA member in your advocacy day, when you do it, with your lobbyist, and become better acquainted and help educate a policymaker in Annapolis, pays dividends sometimes years later when they're on a House Financial Services Committee or some other important committee. Not only do they know you, but they know you've been talking to them about these issues and that you are a trusted member of the community looking to get people into homes in a sustainable way.
And I would say on that, even developing a relationship when there is no ask is very important.
Right.
If you go to your advocacy day or you go to have a meeting with your local representative, even if there isn't a specific bill that we need to pass or don't want to pass, just dropping in and bringing MBA state data sheets and just answering questions about your day-to-day and how your work is going and what you expect to see in the mortgage industry, that pays dividends tenfold over when you have to go in for an ask. So just making sure you keep that connection and building that relationship.
Thanks. I had a mentor once tell me, build relationships before you need them.
Right?
Yes.
And so, Coop, you mentioned the grassroots.
Yeah.
So why is the grassroots advocacy so important? And what can an individual, why is it important? And so I'm sure you're going to talk about programs like the Mortgage Action Alliance.
Sure.
We have a PAC, things of that nature, but why is it important?
Yeah, well, let me just level set by saying there's a PAC or a political action committee, and that is about donating money to candidates who are running for election that support our industry. And you have a state PAC and we have a federal PAC, and you can't cross streams there, but it's about elections and re-elections of people who support our industry. On the issues, it's important to distinguish it because there are very strict laws about this. We have what's called the Mortgage Action Alliance, or MA, and that's MBA's free program to anybody in the industry who wants to help us advocate on behalf of the issues that help our industry be successful in helping consumers. And like I say, it's super easy to join. It's super easy to participate. All our lobbyists ever ask you to do is hit send on an email they're already going to write for you that you could edit. I've taken action on my phone in, I'm not kidding, 15 seconds when they send out the call to action, right? And it's either to support or oppose a bill that they're concerned about. It is always the case that that activity is based on well-vetted MBA policy. And what's kind of cool about this is not only can we direct it towards Capitol Hill, if you at the MMBBA have an issue, we can point that cannon at your state representatives. And so you enlist in your home address where you vote. And so that allows us to have your representatives in the database matched to you, so that when you get one of these calls to action that either MBA sends out through its MA contacts nationally, or the MBA and the MMBBA send out to Maryland MA members, all that comes up is sort of a pre-addressed email to 2 or 3 people, depending on whether it's Senate and House, or Senate, House, and something else, committee chair. So we work very closely with all the states to make sure that they're maximizing this. And all we ask is that you guys help us by getting folks enrolled, and it's takes about a minute to do it, and never has cost a penny and never will.
And so we have our crab feast, MMBBA Live, not live, but the Maryland Mortgage Bankers and Brokers Association. So everyone that's listening, our crab feast is September 10th at 5:30 p.m. And the Mortgage Action Alliance will ask for some assistance with that as well. We'll have some information at our tables and such for folks to be involved. We're also going to be raising money as well for, as Coop mentioned, the PAC, because that's important to us as well. But September 10th at 5:30. So as we wrap, I just Coop, Liz, could you leave our members with like one key takeaway about advocacy and engagement? Like, if you could do that, what would it be? Just one key takeaway.
Mine would be, don't be afraid of it. Like I said earlier, you guys, it's essential. You guys do such a good job with helping folks who have never done any of this stuff before get comfortable. And it's so essential to help us educate policymakers on the very important work that you do. And Liz's point earlier about, even when you have no ask, that's often the best time to go and have these conversations, because there's nothing at stake at the moment, right? You're just telling them, hey, look, I got 20 people that work in your district on these issues. That's 20 folks looking to get people into homes every day as their jobs. So yeah, don't be bashful. Don't be intimidated by it. It's there's a lot of help, and it's not really that hard, to be honest. And one last anecdote: every time we've gone to Capitol Hill, and I've led a group up there, and I've had a newbie on that first meeting in the morning, by the time you're doing the second meeting, they're saying things like, "Let me at them." It's been demystified, and they couldn't be nicer to you when you're talking to a policymaker.
Yeah, I would echo the same comments in that I think it's really interesting. It's a whole other world when you get into it. I did not go to school for public policy. I'm not a lawyer. I play one on TV. It's really interesting. It's a lot. Once you get over the initial concern of like, oh, it's a legislator or it's a politician. Once you get over that, you see the real human being, and you are the one that knows better what is happening in the mortgage industry and how things work. And they really are interested to hear what you have to say as a Maryland resident and a constituent, versus Coop and I coming in from DC and telling them how things work at the national level. It's actually your voice that matters tenfold.
Thanks. I'm listening. I'm just taking some notes. Whole page of notes here. Thank you. Did we miss anything?
I just would say, if you go to mba.org, there's a link there for the Mortgage Action Alliance. Please do take advantage of it. But I likely will be joining you at one I think is one of the great events of the year, is your Crab Fest, and I'll come with my checkbook.
Well,
I'll have to miss out. So Coop is going to come for 2.
Are you going to eat for 2?
No. The one thing is, it's such an idyllic moment. You got a sort of late afternoon sunset over the bay, and you have cocktail. I figured it's sort of like a yacht club that you do it in, and
Yes.
it's this beautiful backyard in Annapolis, and
I already have FOMO, Coop. You don't need to make it worse.
but it's like I'm happy with just a little bit of RAR beer and sort of enjoying the sunset in good company. So I'll probably have one or two crabs, but that'll be about it.
It sounds good. It's a lot of work picking those crabs as well, though. So, Coop and Liz, we thank you for joining us today. Really appreciate this and just all the work that you continue to do for our industry, all the efforts. Also, would be remiss to it scrolled across, but I want to thank our sponsors, Bay Capital Mortgage. Thank you, CIC Credit and CMG Home Loans. So one of the biggest takeaways from today's discussion is that advocacy isn't something that happens in just Annapolis or Washington. Effective advocacy happens when our industry professionals stay informed, stay engaged, and help policymakers understand how these decisions are made decisions impact housing, consumers, and our industry. And as Coop mentioned, don't be afraid. Liz, you mentioned also to build your voice. And so we're fortunate to have such a strong relationship with you at the MMBBA. I apologize, at the MBA, because we're the MMBBA. And we appreciate the partnership so much and support, both those organizations, that we provide to our members. And so, thank you for everyone who joined us today. Be sure to connect with MMBBA for future episodes of MMBBA Live. I'm Sean Williams. And again, today I was joined by William Cooper and Liz Facemeyer. And so thank you for joining us, and we'll see you next time.
Thank you.